The crypto market's comeback was short-lived, as the bulk of coins fell back into the red on 10th May. The biggest crypto assets dropped in lockstep with global technology equities for the 8th week in a row. Many did not expect this, and many believed they were in a bull market. Although the market has already been in a bear market for months since January 2022, many people have lost a lot of money as a result of Luna, and a lot of anxiety has caused retail investors to lose faith in the entire crypto sector. The question is this vindicated? Here's a closer look. First and foremost, I would like to emphasize that many ordinary hardworking individuals have lost their whole savings. While money isn't everything, losing a significant amount of it might feel that way. If you or someone you know has lost money as a result of Luna UST collapse, remember that life is always worth living. If you haven't heard, Terra USD or UST, a cryptocurrency that is meant to stay at $1, also known as a stablecoin, has lost its value. It's typically not a good sign when something is meant to be $1 but isn't. Furthermore, Luna, the cryptocurrency that underpins UST, has lost nearly all of its value. Because these losses have been extensively publicized, this is likely the upteenth story that you've heard on UST. But it needs to be done because readers will recall us raving about the Luna Foundation Guard, LFG, declaring it will acquire $10 billion in Bitcoin to back UST. Stablecoins are a type of cryptocurrency that exists. The value of stablecoins is expected to be $1. Usually they are occasionally €1 or €1, but not always. The dollar's hegemony is to blame. Stablecoins exist so that crypto natives may quickly move in and out of the dollar without requiring the approval of the bank. Stablecoins support the majority of crypto trade volume and fuel the DeFi crypto carousel. More crucially, those living under authoritarian governments that encourage hyperinflation utilize stablecoins. Stablecoins come in a variety of varieties, including Tether, USDT, USD Coin, USDC, Binance USD, BUSD, and DAI, or DAI. We also have Terra USD, which was fairly notable UST. These are 5 largest stablecoins with a combined worth of $160 billion. 3 of these stablecoins, USDT, USDC, and BUSD, are collateralized stablecoins issued by centralized entities. These entities control a treasury of dollars that back each coin, allowing the bearer to redeem the coin for $1 from the issuer. DAI is unique in that it is backed and collateralized by a diverse array of crypto assets. Instead of being issued by a single institution, DAI is managed by MakerDAO, a decentralized autonomous organization or DAO. DAI is collateralized with crypto rather than dollars, but it is over-collateralized, which is essential. UST is even more distinctive. It's not at all collateralized. The Terra protocol powers this algorithmic stablecoin. It is instead backed by the Luna crypto coin. On the surface, this is rather ingenuous. It's straightforward. If there is enough demand for UST to raise its price to $1.01, the protocol prints some UST in return for releasing some Luna. The issue is that it functions well until it does not. That should read $1, not 11 cents. The Luna chart appears to be far worse. Naturally, you suspect that the mechanism has malfunctioned. It was not broken. It worked as intended, as seen by the amount of Luna that was issued when the protocol attempted to algorithmically bring UST back to $1 as Luna's price plummeted. That's correct. On May 5th, the total quantity of Luna tokens increased from around 725 million to over 7 trillion. Luna, on the other hand, lost 99.9% of its worth. This is how hyperinflation seems. Terra Labs, the firm behind Terra, worked forth a plan to acquire $10 billion in Bitcoin and other crypto assets through the LFG as a backstop in case something like this happened, as previously indicated. However, the issue continued. Unlike the other top 5 stablecoins, UST was not completely collateralized. Prior to its collapse, UST market value was $18 billion. It far exceeded the foundation's reserve of over $4 billion. The next to be noted is that Portugal takes a U-turn on crypto market. According to the statements made in Portugal's parliament on 13th May, Finance Minister Fernando Medina indicated cryptocurrencies will be taxed in the nearest future. As reported by Sapo, many countries already have systems, many countries are building their models in relation to this subject, and we will build our own, Medina said of crypto taxes. Susana Durate, an associate partner at Abreu Advogados in Lisbon, told CoinDesk the government has said that it will move forward with the taxation of crypto, while she stated that the new policy will include a capital tax gain, she said that the government has yet to clarify how staking and yield farming will be impacted. Portugal was once thought to be a tax haven for Bitcoin investors thanks to its 0% effective capital gains rate. There is no specific law, it's just a lack of regulation that led to the zero taxation in Portugal, Durade explained. This, together with an understanding published by the Portugal Tax Authority in 2016, meant that only crypto-related businesses can be taxed. Durade said her local customers are concerned, with both individual and businesses wanting clarity and confidence on the government's proposal. Portugal's current capital gain tax rate for financial investments is 28%. Portugal's new tax policy aligns the country with many other countries throughout the world. Australia, the United Kingdom, and the United States are among them, with Australia's tax agency warning investors on Monday that they must record capital gains and losses on crypto every year. What else did the USD crush inform us? On the plus side, Bitcoin did not fully crash. During the wild rush to bring back USD to $1, over 80,000 BTC from over 4 billion treasury was potentially sold. We can't confirm if the Bitcoin was actually sold, but it was forwarded to exchanges. Sure, there was a price reaction, but the larger crypto market also dropped off as a result of unfavorable news about a major crypto project. Luna was once the 10th most valuable cryptocurrency. When you consider the uncertain macroeconomic situation and general market risk-off mentality, it's nearly unbelievable that Bitcoin still has a market valuation of over $500 billion. Given the exceptional bull market of the previous 13 days, I believe we have become desensitized to high numbers. Therefore, this bears reiterating. Bitcoin was a worthless peer-to-peer electronic monetary system invented by an anonymous individual in 2009. Despite the fact that no major corporation or government has invested in marketing, research, or legal services, it has grown into a significant macro asset on which influential politicians and financiers feel compelled to remark. A serious macro asset that can withstand massive selling volumes and still not disappear. Bitcoin is not going anywhere. Crypto is as well. That may be a beneficial thing as long as we learn from it. But if history is any guide, we must guarantee that future us does not succumb to overconfidence. Let me give you a few tips. I can only share what I do. So when investing, first decide the budget you can miss and do not require for your everyday existence. By doing so, you will frequently find that the amount is already much less. You decide how many parts of the way down you want to walk. Once you've chosen a project on which you want to invest money that you can miss if it becomes useless, I usually divide the budget by 4. You want a thick project with future promise, not a Doge Shiba X coin, but a substantial long-term initiative. You may now begin searching for suitable entry points. I usually enter a project when the market is highly nervous, as seen by huge falls and bad sentiment, as it is today. And I'm not going all in on this endeavor yet. I've just invested the first portion of my money. The second half isn't needed in there if we climb, since I'll gladly return my deposit. But always leave a little for a free ride. But if we have another terrible fall, I'll search for another suitable entry point, which may be months later depending on the price and market. You'll never know the precise bottom. Trying to figure it out will simply distract you, and you'll end up buying nothing and saying, "I had but bought." Now you are an iron-strong hand in the market. And there's no media outlet that can strike me with FUD since my budget is already lost and nil. So you can only win, and I always win. Put on a stop loss and adjust the SL nearer the point where you truly plan to take part of the profit where you made a good profit with a spot trade. You can never lose this way. Stay crypto safe, people.